Investing in the stock market can be a daunting experience, especially when you're just starting out. I know because I've been there. The entire process can feel overwhelming, full of jargon and complex strategies that leave you confused. Even choosing the right type of investment, like ETFs, can be a challenge. But despite the initial struggle, over time things started to click for me. I managed to turn things around, and I want to help you do the same. When I first started investing, I had nothing. I was essentially broke, like most people when they begin. It's common to start with a small balance in your account, sometimes even $0. But I began with just $5 in 2019, and I decided to invest it in an ETF called VU, the Vanguard S&P 500 ETF. I was only 18, but I knew this was the best way to start investing for the long term. From there, I worked a series of jobs to grow my income and continued investing in more ETFs as I built my financial knowledge and portfolio. Over the years, I also opened up a Roth IRA account. As my investments grew, I hit a huge milestone, a six-figure ETF portfolio. On top of that, I opened up a 401k once I graduated from college. Fun fact, I now work in the finance industry, and investing for retirement is one of my top priorities. Now, why am I telling you all of this? Because I want you to understand that achieving financial independence and ultimately retiring as a multimillionaire isn't some far-off fantasy. It's possible, and I'm on that journey too. The ETFs I'm about to share are the key to my success and will be part of my portfolio for the next 40 years. These are not just good investments. They are great long-term vehicles for building wealth. They'll help you create a diversified portfolio, earn dividends, and even see significant capital appreciation. I believe these 6 ETFs will be your best bets for the next 4 decades. But first, let's talk about why ETFs in general are a fantastic investment option. There are thousands of ETFs available, each with its unique characteristics. The ETFs I'm recommending are proven winners, but I'll also mention some honorable mentions toward the end of the video. My first ETF pick is VU, the Vanguard S&P 500 ETF. This is my cornerstone investment, and I currently have $88,842.41 invested in VU, which amounts to about 180 shares. This ETF is one of the most reliable and diversified options for any investor. The beauty of VU is its exposure to the top 500 companies that make up the S&P 500 index, which represents the U. By investing in VU, you're effectively investing in some of the best companies in the world. Companies like Apple, Microsoft, Amazon, Google, and Meta, formerly Facebook. VU covers all sectors of the economy, but its top sectors include information technology, financials, healthcare, and consumer discretionary. Over the past 5 years, VU has returned an impressive 18% annually. Over the last decade, it's provided returns of 12% per year. Additionally, it offers a dividend yield of 1.45%, which is a solid return for a fund that focuses on large-cap stocks. With an expense ratio of just 0.03%, VU is also extremely cost-efficient, making it an excellent long-term buy. QQQM, Invesco NASDAQ 100 ETF. Next up is QQQM, the Invesco NASDAQ 100 ETF. Currently, I have $21,636.72 invested, amounting to around 115 shares. This ETF focuses on 100 of the largest companies on the NASDAQ stock exchange, excluding financial companies. It's heavily weighted toward technology, which is a sector I'm very bullish on for the long term. QQQM is great for those looking to capitalize on the explosive growth in tech. Its top holdings include names like Apple, Microsoft, Nvidia, and Meta, which have been driving innovation for years. Over the past 5 years, QQQM has returned a staggering 20% annually. And over the last decade, its annual returns are around 17%. It offers a lower dividend yield of 0.68%, but its growth potential is enormous. The expense ratio is 0.15%, which is still quite low for a tech-heavy ETF. VTI, Vanguard Total Stock Market ETF. The third ETF on my list is VTI, the Vanguard Total Stock Market ETF. VTI is one of the most diversified ETFs you can buy, as it gives you exposure to the entire U.S. stock market, large cap, mid cap, and small cap stocks. With over 3,600 companies in its portfolio, you're getting diversification that goes beyond the S&P 500. You might be wondering why I own both VTI and VU. The reason is simple. VTI gives me exposure to a broader range of companies, including mid-cap and small-cap stocks, which can have higher growth potential. If my 401k offered VU, I would have chosen it instead, but since VTI was the only option, I went with it. VTI has delivered fantastic returns, averaging 18% annually over the past 5 years and 11% annually over the last decade. The dividend yield is 1.4%, and it has an expense ratio of 0.03%. It's a solid, well-rounded ETF that's great for long-term growth. SCHG, Schwab U.S. Large Cap Growth ETF. For those looking to invest in growth stocks, SCHG is a fantastic choice. I have $10,254.27 invested in this ETF, which gives me exposure to high-growth companies in the U.S. This ETF focuses on large-cap growth stocks, which are companies that have above-average earnings growth. SCHG invests in a wide variety of sectors, but its main focus is on technology, consumer discretionary, and healthcare. Its top holdings include Apple, Microsoft, Amazon, and Meta, all of which have been at the forefront of technological innovation. SCHG has delivered strong returns, averaging 20% annually over the past 5 years and 14% annually over the last decade. The dividend yield is low, at just 0.4%, but that's typical for growth-focused ETFs. The expense ratio is also very low at 0.04%, making it an affordable option for growth investors. 5. SCHD, Schwab U.S. Dividend Equity ETF. If you're a dividend investor, SCHD should be on your radar. I have $5,293.72 invested in this ETF, which gives me exposure to high-quality dividend-paying stocks. SCHD is known for its impressive dividend yield and its ability to deliver consistent dividend growth over time. This ETF is focused on large-cap stocks, primarily in sectors like energy, consumer defensive, healthcare, and industrials. Its top holdings include companies like Chevron, Coca-Cola, and Bristol-Myers Squibb. The dividend yield for SCHD is an attractive 4%, and the expense ratio is just 0.06%, which is very reasonable for a dividend-focused fund. Over the past 5 years, SCHD has returned an average of 17% annually, and over the last decade, it has delivered 11% annual returns. Its combination of strong dividends and capital appreciation makes it an excellent choice for long-term investors. DJRO, iShares Core Dividend Growth ETF. Finally, we have DJRO, the iShares Core Dividend Growth ETF. I have $2,661.60 invested in this ETF, which is focused on high-quality dividend growth stocks. What I love about DJRO is its ability to generate a dividend snowball effect, where your dividends grow larger over time, providing a steady stream of passive income. DJRO invests in a broad range of sectors, with the largest allocations in financials, technology, healthcare, and consumer staples. Some of its top holdings include Microsoft, JP Chase, and ExxonMobil. The dividend yield is around 2.4% and the expense ratio is 0.08%, making it an affordable choice for those looking to build wealth through dividends. Over the past 5 years, DJRO has delivered 16% annual returns, and over the last decade, it's returned 11% annually. This makes it a strong performer for dividend growth investors. Now, I know you're probably wondering about my personal ETF portfolio allocations. Well, let me break it down for you. In my taxable account, I have a 3 ETF portfolio that includes VU as my primary holding. For my Roth IRA, I've created another 3 ETF portfolio that's more focused on growth and aggressive strategies. Finally, my 401k is a well-diversified single ETF portfolio focused on long-term retirement savings. If you want to see exactly when I buy all my ETFs and get updates on my entire ETF portfolio, you can check out the Blossom app where I track all my investments. The link is in the description and pinned comment. I hope this video has given you some clarity on which ETFs to consider for your long-term investment strategy. If you found this information helpful, please like the video. And if you want to dive deeper into investing in VU and the S&P 500, check out this free guide video right here.